I've got 2 computers and 5 monitors.
Okay.
So I've got the streaming program, I've got YouTube up, so they kind of showed the same thing. Then I've got my main screen where I had the PowerPoint that with the intro waiting for this, and then the Zoom. And then I set up my laptop to look at my YouTube channel to make sure that what I'm seeing is what everyone else is seeing.
Oh, okay.
So I can close that. I just wanted to send, I'm just checking to see if Jeff was going to join us or not. He said he was, and then we will get started. We'll be about 1 more minute.
Sure.
So I tell you what, while we're doing that, why don't you go ahead and introduce yourself to everybody here? Everyone knows me. This is my channel. I'm Malachi, and I'm on my journey to financial freedom using mostly Forex trading bots, but also other sources of passive income, which is how I met Steve. So Steve, why don't you tell people a little about a little bit about yourself?
Sure. So I'll share my background. I actually got started many years ago as a financial advisor. So I was a certified financial planner. So I did estate planning, tax planning, portfolio management, risk management, all that sort of stuff. Did that for about 10 years until 2002. And for those who are old like me, you'll remember 2000, 2001 was when the tech bubble burst. And there's nothing you could do about it at the time. And I said, you know what, there's got to be a better way to create wealth. And so that's when I switched from helping people invest in the stock markets to helping people invest in real estate. So from 2002 until 2019, most of what I did was helping people invest in real estate, while obviously building my own portfolio as well. And then 2019, I kind of looked around and said, wait a minute, 95% of my assets are in real estate. I've got to diversify. And along those lines, I wanted to not only diversify, but diversify with a focus on passive cash flow. And so I wanted to build passive cash flow, and my goal is to build enough passive cash flow to pay for my kids' college with no out-of-pocket costs. Just let the cash flow pay for their college. And so in 2019 is when I started doing that, and I had 4 years to build up that income. Sorry about that. And so I started building passive cash flow a variety of different ways, and it worked really well. And so after 2 or 3 years of doing that, in 2022, I started showing people how to do what I had done. Kind of like you talk about your journey. This is what I did. This worked great. This worked. You put it here, and here's how you get diversification. Here's how this generates cash flow. And I started doing that one-on-one in 2022. And then by the end of the year, I realized what I was doing was I was doing 12 one-on-one sessions with people, and I realized I was saying the same thing for most of the first 8. explaining this, showing how leverage works, showing how this works. And I said, I got to record this to save myself a lot of time. And so I recorded it in late 2022 and made a course out of it, made a little program, started selling that. And I did that through 2023, which it's still available, but we kind of consolidated that down into a little bit less information, about a 1-hour mini course. But really the focus of what people want, most people don't really want a course, they just want really good investments. And so we've really kind of changed the focus. So when people work with us, here's this investment, let me introduce you to this guy, let me connect you with this person, this organization, or whatever that is, and show you those investments, as opposed to, well, here, go through the course and focus on the create a plan and all that sort of stuff. And so there's really all this available, but a lot of people, they just want the investments. So that's kind of how we got to where we are now.
I would agree. I've noticed that quite a bit, that I like to teach people so that they learn and they know what they're doing, but a lot of people don't want. They want hands off. They just want you to do it for them, or they just want to send their money to someone else and get their money. They don't really want to learn the technical aspects of it.
Yeah.
So what I've been doing, and I was in for people that don't know, and I know we've talked, Steve and I were in quite a few, we didn't even know each other, we're in quite a few of the same projects together, and some of them, not all, but some of them were failures and some of them are still going. But I kind of got away from the passive side of it and got away from giving my money to other people, just because there are scams out there and there's a lot of stuff out there where it doesn't give you the returns. And I don't mind a project that fails. I don't mind a project that, or even a trading bots or something like that fail. I do mind getting ripped off. So that's kind of why I moved away from it. But I do feel like that is the core of where I came from, was this whole passive income. And when we met on one of the other projects and you were talking about this, I started, actually, I think one of another YouTube influencer had done some videos, and I saw what you had done. I'm trying to, I think it was the mango farm. The first thing that I saw from you on one of the other YouTube channels was talking about the mango farm.
Okay.
So that kind of got me interested, and I started checking you out, and you came out with the new website. And so tell me, or tell all of us, we got a solid 4 viewers right now. So tell the viewers, what is your website, and what exactly is it going to do for them? Like, what's the idea of it?
Sure. Well, the website is unbrokeninvesting.com. And basically, as a former financial advisor, I think the traditional method of investing is broken. When you sit there and you put money, your hard-earned money aside month after month after month, you invest it, you work with financial advisors, and you do that for 40 years, and you think you're prepared for retirement. And I can share this story from several people in 2001, 2002, is 60-year-olds who'd been saving for 40 years, 64, 65-year-olds about to retire, and then they lost half their money. And again, that system, in my opinion, is broken. To put that much of your stuff in one place, to have it based primarily on the stock market, but also to be satisfied with a 10% annual return. If you look at the numbers, I mean, the S&P 500, the 30-year average and the 50-year average, it's between 9.5 and 9.9% per year. So if you're earning 10%, you're actually beating the market. And interestingly enough, a recent study showed that only 15% of fund managers beat the S&P 500, which means the other 85% are averaging less than 10% a year. And so just a quick math game here. If you have $100,000 and you want that to turn into $1 million, if you're getting 10% a year, it's going to take over 20 years. Actually, around 25 years is when you'd hit the $1 million mark. Okay. Now, if you had that same 100,000 and hypothetically you're making 10% a month, actually 8% a month, it's going to hit $1 million in about 3.5 years. And so, I mean, it's that big of a difference. And a lot of people don't think of it that way. They're just like, oh, well, yeah, you're getting a higher return. That's great. But when you look at the difference between having $1 million in 3.5 years versus $1 million in 25 years, that kind of puts a perspective on what we're trying to help people do is you have the financial freedom to retire earlier if you want to. If you want to keep working, that's fine. But that's really the focus of what we're trying to do. And so to do that, you've got to get higher returns. And so when they join our community, the main thing that most people want is access to those investments. Some of them are private opportunities. Some of them are private organizations. Some of them are just unique things that you just won't find in most places on the internet. And our goal is to find as many things that average 8% a month or more. That's kind of our goal, because at that rate, it doubles every year. And so we have some outperforming that. We have some that are in the 12 to 16% a month average range, which is crazy. But if they're earning 8 to 10% a month, we're pretty happy with them. And so that's the goal, is to find those products and to share those with our members. Now, besides the products, we offer numerous weekly calls so people can get on, ask questions. We'll do calls about specific products, and we'll just have some that are just kind of open Q&A. Anyone can hop on and say, hey, Steve, I was looking at this real estate opportunity and want to know what you thought of that. Let's go through it. So it's not just all products, it's a community, it's answers and support to help you on that journey to financial freedom. So that's what our program entails.
I love it. So one of the things I really liked, and I always preach diversity to people in investing. Don't put all your eggs in one basket. And I know that you kind of have a plan on diversity that you've showed people. Can you tell us what your kind of how you do and what you recommend people for diversity? Sure.
So it starts with going what I call 6 wide, which means 6 different markets. So the stock market, that is one market. Again, I invest in it. It's not my favorite, but yeah, I've got money in stocks. Another market is real estate. Another market is notes. I'm a lender on a lot of different opportunities where I've loaned my money out secured by real estate, and I'm getting double-digit returns on that. And so that's 3 of the markets. Agriculture is one of the most interesting. You mentioned the mangoes, but the reason is, what I like about the agriculture is it's the simplest example, because you can look at 2022 when inflation skyrocketed, the stock market dropped 20 to 30%. And what happened to the grocery prices? They skyrocketed. And so I had money in mangoes, oranges, avocados, coffee, chocolate, walnuts. What happened to my income on every one of those? It went up with inflation. And that's what I use that example quite frequently to explain diversification. And so a lot of people think, well, I'm in the stock market and I've got tech stocks and healthcare stocks and bank stocks, and that's not diversification. It's all in the stock market. And the stock market goes up and down together because a lot of the things that influence the stock market are the economy and interest rates. And so if interest rates change, all the stocks go up or down together. That's not diversification. But when you have something like agriculture that can go up by 10 or 20%, when the market goes down by 20 or 30%, that's true diversification. So that's, like I said, we go six wide. That's agriculture. I'll share the other two real quick. One of them is owning a business. And so if you can own a business, whether you run it yourself or you have a third party that runs it for you, it can provide protection, provide that cash flow. And then the last one I call digital assets. And it's kind of a catch-all for something that doesn't really fit into the other five. It's not just buy and hold crypto. We do some crypto mining that we recommend. That gets great returns. And the example there is, imagine if you had a gold mine and every day you brought out 1 pound of gold. Awesome. What's that worth? Well, it depends. What is gold selling for that day? And so some days it may be worth a little more, some days worth a little less, but you're getting a pound of gold every day. And that's kind of how to look at mining. And so we mine crypto. Right now, Bitcoin is between 60 and 70,000. Well, when it was between 20 and 30,000 crypto mining, we were still making about 4.5% a month. Now we're making 6 or 7% a month. If it goes up, we could be making 10 or 12% a month. Or even if it drops in half, all those people that are jumping in to buy Bitcoin today, if the price drops in half, they're going to lose half their money. If they get into mining today, their monthly return will go from 7% back down to 4.5% every month. And so that's how we invest in crypto that way. And that kind of emphasizes the point of passive cash flow. And so we think that the items that create cash flow are the most important. And so I'm having a hard time talking. Items that create passive cash flow are more important. Too many people try and focus on the buy low and sell high. They try and time the stock market, time the crypto market. And I can show you study after study that most people are terrible at it, even professional money managers. As a matter of fact, one last thing, I'll get your next question. I saw a study just last week from MIT, as a professor at MIT and a professor at Chicago, University of Chicago. And they did this lengthy study of 10 or 15 years with 800 funds, and they used with professional money managers, and they compared them to the results of a baby who just randomly pointed to things on a screen. And it was almost dead even.
Wow.
So even the professional money managers can't be a baby randomly selecting it. And they talk about that part of it, it's the emotion, is that the baby randomly sold better than the managers who, because of emotion, either agreed, oh, I'm going to wait till this goes up a little bit more. I'm going to wait till, oh, no, it went down, but I'm going to wait for it to recover. It's emotion, and that's what messes up investing. And when you take that out of it, you can actually get better returns. But if you can avoid buy low, sell high, and having to time it, if you can avoid that altogether, you get better returns, and that's where we focus.
Okay. So what other? I think that's 5. Is there a 6th category there?
Did I miss one? Stock market, real estate, notes, agriculture, businesses, and crypto.
Okay, so you're
digital.
putting the notes and the real estate on 2 different ones.
Yes.
Okay.
Yes.
I kind of consider those, if you're doing notes on real estate, the same, but that makes sense.
Well, and the reason I have them separate, and I tell people I do both. I prefer the real estate because of leverage and tax breaks. The other part is inflation. So for those 3 things, I like real estate a lot better. So I can earn a 12% return by lending my money. But what happens is, if that's a long-term loan, 5, 8, 10 years from now, I'm still getting the same amount every month. And so it's not going up with inflation.
Right.
And I haven't used any leverage. And frankly, there's not great tax benefits. Now, there's a little bit of tax benefit to it, but real estate, you got the depreciation and all these other deductions, and the value goes up and appreciates over time. So they're definitely different, at least the way we track them.
So I think one that I think people know real estate and they can obviously jump in and talk to you about it. Tell us about these agricultural things that you've got on yours. Tell us more about that, because I think that's something that most people have never heard of.
Sure. And I'm actually going to do two things. You asked me about diversification. I mentioned going six wide. I forgot. We also show you go six deep.
Okay.
In
Yeah.
other words, don't go buy one house and say, "Ooh, I'm in real estate," and you're done. You want diversification. You get multiple houses or multiple strategies. One of them that I've invested in recently it's pretty cool. It's called rental arbitrage, where I invested and it's an Airbnb. I signed a long-term lease to rent that unit for monthly, and then we're turning around and we're selling it on Airbnb daily. And I mean, the returns are fantastic. Upfront capital is very little. And so that's still real estate. Now, granted, I don't own it. So, but it is a cash flow, but it's another way of diversifying within real estate. Now, within agriculture, again, I've got, mangoes and avocados, coffee, chocolate, walnuts, and there's different. So I've got diversification on different continents. I've got different diversification across different types of food. But also with different owning strategies. For example, in Southeast Asia, foreigners cannot own land. So I've got a 25-year lease for the mango trees and the avocado trees. Whereas in Central America, South America, and the US, I can own the land, and no matter what happens there, I get my orange grove. Once those orange trees die in 25 years or so, I can decide, do I want to sell the land or do I want to plant more orange trees and go another 25 years. And so it's got some long-term benefits to that. But again, diversification within agriculture is very important. As far as how it works, they're almost all the same, where you own the asset and you get income based on the produce. And so what will happen is once a year they have a harvest, they'll sell it at market, and you get 80% of the profit, and the manager gets 20%. And so with the way that works is they want the biggest harvest possible, as far as quantity, and they also want the highest price. And so anything they can do to maximize the number of oranges, the weight of the oranges, all the oranges they're going to sell, they want as much there as possible. And then they want to go get the highest price possible because they're motivated for the exact same thing that we are. That's how they make the most money. That's how we make the most money. And so I like that model, and that's the way that nearly all of them work.
Okay. So that's very interesting. I have invested in the mangoes, and I know you sent me the link for the walnuts the other day, and I'm still looking at that one. I'll probably jump into that next month a little bit. Yeah. What other kinds of stuff do you do? I saw that there was like some hedge funds on there and stuff like that. How many of those opportunities do you see or do you have available for people?
So it varies. My favorite one, as a matter of fact, I got the report yesterday. 14.37% was the return for February. That was 1 month. That keeps their streak alive. They have had at least a 10% return every month since they were founded in 2022. And so I've been with them for about 13 months. I'm up about 150%, actually more than 150% now. And they've been doing fantastic. They're wonderful. They communicate. They're easy to reach. You get great monthly reports. And so just very easy to work with. That's our favorite. But there are others, different types of funds. There's one that's within a private society where they've got a trading fund. There's another one that's in the DeFi space that does trading. And so there's a couple others that are set up a little bit differently. But that one is my favorite just for the transparency, the reporting, and all that.
Okay. So I did throw if people are interested up in the comments, I pinned my link, and they'll notice that there's a referral link for that. Tell us and I know you just started this referral link, for those people that do make money on referrals, what do they get out of referring people to or what will I get, say, if someone clicks my link and signs up?
Sure. Well, first of all, the program itself is $97 a month to be a member. And so obviously, if you've got any amount of money and we can show you how to make 10 and 12 and 14% on a consistent monthly basis, $97 a month is nothing.
Right.
And so it's a pretty good bargain. And once people get in, they stayed in. As a matter of fact, I would have to check. To the best of my knowledge, I don't think we've had a cancellation yet. I think everyone who's ever joined has stayed in. And plus, you got the community. You can talk to people. You get new updates. I mean, this month last month we've rolled out 3 new investments. I mean, most people want to, hey, what's the next thing? What's the next thing? So you stay in, and we basically we paid 20% affiliate fee for every payment they make. And so you refer 5 people. So in other words, if you join, it's $97 a month. You refer 5 people, you're getting 20% on each of those. Well, you've covered your membership. You keep getting in more people, and you just keep building that passive cash flow for as long as they stay in. If they do some other stuff inside the group, there are opportunities for you to get fees on those things as well. So if they there's a few things here and there. If they buy the course, for example, and they say, okay, hey, I like that mini course, I want the full thing, then you get 20% on that. So there's some other things as well, but the main thing would be the monthly subscription.
Okay. So what, I guess I should have asked, what other than this, or I guess other than just the ideas that you have on there, what exactly do they get for their $97 a month?
Sure, good question. So yeah, access to the investments. The 1 hour mini course, it's pretty helpful. Because I talk about, there's most people just think of growing their wealth. Hey, I've got this. I want to grow this as much as I can. Absolutely. But we also talk a lot about creating wealth. And when we cover that in the mini course, and the best example is one of the houses that I bought, I paid $4 a month for it. Like people, you did what? I turned $4 a month into $70,000. And what I did is I worked with the seller. I know this is a few years ago. And I worked with the seller. We agreed to a price, and I was paying him $804 a month for 5 years. And then I placed a tenant at $800 a month, and he ended up staying for all 5 years. And so every month it cost me $4. And at the end of 5 years, I owned that property free and clear. I knew it was not going to be a high cash flow property. I don't usually have properties that are that narrow where I'm actually losing money, but to pay the entire thing off with zero money down and to be paid off in 5 years, that's how you create wealth. I use the tenant's money to pay off the seller. So the seller provided the financing, and instead of me paying off the financing, the tenant, when he paid rent, I just used that to pay it off. So $4 a month for 5 years, that's about $240. And then I sold the house for $70,000. And that's an example of leverage, of using other people's money to create wealth. And so the program we have, the mini course that you get when you join, that explains that sort of stuff. Some things about mindset, how to think differently about money, how the wealthy make decisions regarding money. And then, of course, there's a section we go through all six of the markets. The third module, or the third part of the mini course, we talk about creating a plan. Okay, where are you, and where do you want to get to? I tell people like planning a vacation. If I'm in New York and I want to get to Miami, there's a lot of ways you can go. You can take a boat, a plane, a car, a bicycle. You could walk. Depends how much time you have. Depends on your budget. Depends on all sorts of stuff. Even if you're going to drive, like the highway or the back roads, all sorts of options. And your financial planning is the same way. You have to understand where you are, and then understand where you want to get to, and then knowing your parameters, your risk tolerance, things like that will help you figure out the best way of getting there. And that's the planning part. And so that's pretty helpful to most people. That's included in the program. And so that's just all up front. And then once you're in, again, it's the weekly calls on different topics. I don't expect anyone to join every call. Right now, we're doing 4 a week. My goal is to get that up to about 8 a week on different topics. And again, I don't expect anyone to attend all of them. But if you say, you know what, I've been building some money, now I'm ready to buy real estate, I'll go back and listen to the last 2 or 3 real estate calls, okay? Or digital asset calls, or some people just like, hey, what's the new opportunity? One of the calls is every week, just what's the new opportunity for that week? And so having those available is great. And then I think I may have mentioned earlier, but we have what we call office hours, where you can get on and just ask questions. And so to have a resource where you can ask a question about anything. And so that's pretty valuable. That's one of the things that's provided within the program.
Outstanding. And I will take this chance to jump in and say, guys, if you want to ask questions, you can ask it on the chat in YouTube, or you can ask it on my Telegram channel. Either one I've got pulled up, so I should see it. And I think we're kind of going to wrap this up. It's been about 30 minutes if we don't have a lot of questions. So I want to thank you, Steve, for coming on here. And I'm in this group, and I've really been taking a chance to try and jump in those calls, especially the digital assets call, and learn about new things on that. And the weekly new, what do you call it? I'm sorry, that you call it like the new opportunities.
New opportunity.
Yeah,
just new opportunities. What new opportunities available? Yeah.
I've been telling everyone that I run into about Airbnb arbitrage, and said I'm really excited to see how this works, because I've been talking about it for about a year. But my biggest thing is I don't want to manage the Airbnb itself. I need someone else to do it. So I like the idea that there's a company that's going to come and do it all for you. And what was
Yeah.
your, out of curiosity, what was your initial investment on that Airbnb arbitrage for basically a year's contract?
So I'll tell you this. I'll tell you what I got, and then what most people will get. I got kind of lucky. Again, the startup cost is about 15,000 typically, and so you're paying for first month's rent, security deposit, and most of it goes towards furniture. But then also the company that goes down that set it all up, because they go down there, they meet with a local realtor to find the properties, they coordinate all that, sign the contracts. But again, acquiring all the right furniture and getting it to the unit, all that's included in that setup cost. And I got lucky in that we're actually looking at a nice little unit that I was going to get, but in that same building that day, it just so happened that there became a vacancy on the penthouse unit, and so I was actually able to pick up a 3-bedroom, 3-bath rooftop penthouse unit. And they got me a little deal on the furniture, but I got in for the same price. But just to give you some numbers as an example, my monthly rent that I'm paying for that unit is $1,700, and because it's 3-bed, 3-bath, so you got king size bed, 2 queen beds, and then the living room you got a hide a bed, so you can pretty easily, at 2 to a bed you got 8, okay, and then on the rooftop, I mean, it actually has its own private pool.
Nice.
Pretty
Nice.
cool space, yeah. And so they're like, okay, we should, we pretty much guarantee we're going to get 300 a night of this. We should be able to get 400 or 500 a night. And so at 300 a night, take that times 30 nights a month, that's 9,000 a month. And they said, but assume about 70% occupancy. There's always going to be vacancy, between weeks or whatever. And so even if you take that down to 21 nights a month at 300 a night, you're still at 6,300 a month. So 6,300 a month, subtract the 1,700 that I'm paying for the rent, and the rent includes the utilities, insurance, and everything.
Okay.
Okay. And so the net of that is 4,600 a month. They get 20% for their management fee. So 4,600, they're making, what's that, 920? If my math is correct.
So
they're making about.
they're only taking a management fee on the profit and not on.
That's right.
So they don't make any money if you don't make any money.
That's right.
That's interesting. I like that.
Yeah, I absolutely like it. I would gladly pay 20 or 30% of that than 10% of just, we just get 10% of everything that comes in, regardless if you're making money.
Right.
That's what traditional property managers work. I don't like it, but I can't change it. But I love the fact I'd rather pay 20% but of the actual profit. So that 4,600, they get 920 would be 20% of that, and the other, call it 3,600, 3,700 is my profit. So even if you round that down to 3,000 just to make the math easy, that's 20% per month profit on that $15,000 investment.
Okay. So, and then the next question, I guess, is if you want to go stay there for, say, a month, in theory, they wouldn't make any money because you're not going to pay to stay in your own property. Is that correct?
Correct.
And do they have a problem with that if you're occupying that property and they're not making anything?
No, obviously they would rather make something. And now if you go down there, for 1 month, of the year, and they're running out the other 11, again, that's 4 weeks they don't have to work and fill it up either. So, but yes, they would rather you rent it out so they can make money. But yeah, it is your unit, it is your lease. If you want to go down there 1 week a month, if you're going to go down there 1 month a year, however you want to do it, that is up to you. And so it is your unit. It's your furniture. I mean, that's what you're paying for.
It's yours,
so, yeah, you
right?
can go down as much as
Interesting.
you want.
So we have one of the watchers asked, "Are you renting this through Airbnb or what?" So I guess, and that brings up another question of that. When you're saying $300 to $400 a night, is that the price on Airbnb that
Yes.
that you're advertising?
That's correct.
So Airbnb takes a fee on top of that as well.
Yeah, their fee is pretty small, but it's built into that formula. Yeah.
Okay. So, and I'm not sure if I want to make sure I get his question right. So you're renting this through the property owner, you're leasing it for a year. And
Correct.
you're using a third-party company that manages it, and they find the lease for you. Is that correct?
Right. So yeah, you got two different parts. One is getting the property, and so the company I work with, they've got a partnership. And by the way, they have these in 8 different cities.
Okay.
Okay. This is obviously I'm only in one of them, but but they have management on the ground where they find the landlords, because you got to find a landlord, a property that's desirable, but you have to make sure that it's in the lease that they can sublease, and that they allow short-term rentals. Because if you accidentally sign a lease that doesn't allow short-term rentals, you're kind of screwed.
Yeah, that could be a problem.
But that's why you work with a property management or a realtor that finds those the right type of leases for you, works with a landlord, get your lease signed. You've got the right to that property, and so that's one piece of the puzzle, is getting the property, and obviously they got to furnish it. But then on the other side, the management company, they coordinate and they do all the marketing on Airbnb. They're the super host and all that sort of stuff. They know how to market, know how to respond. They got the team that responds instantly to all the requests, and so that is all through Airbnb as far as how they market it and how they keep the units filled.
So
now,
then,
if you want to, and they asked me this, and I think I laughed out loud. They said, "Do you want to take all the questions from all the tenants for Airbnb, or do you want us to take them?" You can take them.
absolutely. So that's why is it. So once you sign the lease and you pay them and they get the furniture staged, it's really hands off. Like you really don't have anything to do other than collect your paycheck every month, right?
Correct.
Now, do they pay the mortgage or the lease, or do you have to pay that out? Do you have to send the check or transfer the money for the lease, or do they handle all of that for you monthly?
They handle that, since they're handling the net profit. So the total revenue minus expenses. So they pay that as part of the expenses. So that way they know exactly what's left over, and here's your share of the profit split. Yeah.
Okay. I don't see any other questions. Is there anything else you'd like to add that we haven't talked about that you think is important for people to know?
We covered quite a bit. That's all that I can think of off the top of my head. But those are the main things. But obviously, I love discussing financial planning. How to take advantage of some of these opportunities, where it fits in. I will share one thing real quick, just a quick strategy. Different types of passive cash flow have different terms. Okay, and this is pretty important if you're going to try this and do this on your own. And we divide it in 3 categories. One is called infinite. So like if you own a piece of property, you can rent that out until the day you die. You may have to make some repairs from time to time and keep an upkeep, but it's never going to go away. Dividend stocks, same thing. If you got a dividend ETF, they may rotate which companies are getting dividends from, but it's never going to go away. That's infinite. Something like a long-term note that lasts for 25 or 28 years. We do a lot where there's a 30-year mortgage, and we'll buy one that's a year or two old, so there's 28 years left, but it's going to end someday. The agriculture, the 25-year lease, that's a long term. I get income for 25 years, but it ends. And the reason I say that is super important is so I don't get a 40-year-old who buys tons and tons of stuff that's long term. Then he gets up to 65 and goes, "Oh crap, it all ended." You got to know the difference. And then the other one is the short term. And people say, "Well, gosh, if you've got all these things earning 10 and 12 and 14%, you put all your money in that. That's all you'll ever need." And I disagree with that. And here's the problem: we don't know how long these are going to last. Am I going to have this Airbnb unit until the day I die? Probably not. Am I going to appreciate 20% monthly returns for a while? Absolutely. And so with a lot of these higher return investments, we encourage people to take those gains, at least some of them, and then buy the longer term gains. And then maybe take some of those and buy the infinite gains. So a lot of people will use the hedge fund we talked about, some of the other strategies we talked about, and they'll use that cash flow to buy the agriculture that's going to last 25 years, or the real estate and the notes that are going to last, the things that are going to last for as long as they live.
Absolutely. So, you were saying that I thought I had a question that came up and I was going to ask it. Now I can't remember what it is. So it must not have been important, as my mother would say. If it was, I would have remembered it. I think we're going to wrap that up. I don't see any other questions. This is Steve Lawson with Unbroken Investing. My name is Malachi. This is Malachi's Journey to Financial Freedom. And if you're watching this, do me a favor. Hit the like, hit the thumbs up button, leave a comment. That helps with the YouTube algorithms. And if we get to 1,000 viewers, I am going to show what YouTube actually pays content providers when we monetize it. So I'm going to show the back end for people and actually show how much money you make on those little ads that YouTube pops up. Because right now, I don't make a dime on it. So I need 400 more subscribers and we can start trying to monetize that. So thank you very much. And I'm going to look one more time. No more questions. And I will see you on tomorrow's call, I do believe.
Oh, okay. Fantastic. Thanks so much, Malachi.
Bye.
Appreciate it.